Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of September 9th to September 13th, 2024. Let's dive into what to expect in the upcoming week. This week unfolds against a backdrop of intense global economic scrutiny and anticipation. The European Central Bank is poised for a second rate cut amidst mixed economic signals, while the U.S. Federal Reserve's impending rate decision hinges on crucial CPI data. The Bank of England faces pivotal employment and GDP reports that could sway its rate stance. And Asian markets are on alert for key economic releases from China and Japan. The European Central Bank is expected to implement a second rate cut after June's initial 25 basis point reduction. Despite an uptick in services CPI to 4.2% in August, headlines inflation fell to 2.2% year-on-year, and euro area growth remains sluggish, strengthening the case for further easing. President Christine Lagarde may signal additional cuts, but caution will likely remain in her messaging due to the mixed economic backdrop. The ECB's updated inflation and GDP projections, set to be released on Thursday, will be closely watched for further insights. The U.S. dollar faces uncertainty as markets await the Fed's rate decision, with possibilities of a 25 or 50 basis point cut. Fed Chair Powell's remarks at Jackson Hole hinted at a potential 50 BPS move due to labor market concerns. However, recent data has mostly been solid, questioning the need for aggressive action. Wednesday's CPI report, expected to show a headline rate cooling to 2.6% YoY and a steady core rate at 3.2%, will be crucial. This data will likely clarify the Fed's priorities between employment and price stability ahead of the September meeting. The Bank of England is expected to hold rates steady on September 19th, following a rate cut in August. Despite the UK's strong economic rebound and high wage growth, upcoming data could influence the decision. Tuesday's employment report will be crucial, as further labor market stabilization could affect wage pressures and inflation targets. Wednesday's GDP readings, detailing the services and manufacturing sectors, will also be significant. Currently, there is a 75% chance of no change in rates, but disappointing data could increase the likelihood of a 25 BPS cut, potentially putting pressure on the pound. Amid concerns over China's economy, Monday's CPI and PPI figures, followed by Tuesday's trade data, could impact risk-sensitive currencies like the Australian dollar. A strong export print might boost short-term risk appetite, but won't significantly alter the bleak outlook for China's economy. In Japan, Monday's GDP revision for Q2 is the highlight. Growth is expected to be revised higher from 0.8% YoY, potentially raising expectations for another Bank of Japan rate hike this year and supporting the yen's recent rally. This week has been marked by significant economic developments worldwide. The European Central Bank's potential rate cuts, influenced by sluggish growth and inflation trends, contrasts with the Federal Reserve's cautious stance amid solid data. In the UK, critical economic reports could shape the Bank of England's decisions, while in Asia, pivotal data from China and Japan are set to impact market sentiments. Stay informed as we continue to monitor these developments closely, understanding their profound impact on markets and investors moving forward. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.